Okay. Auzubillahi minash shaitanir rajim. Bismillahir rahmanir rahim. Assalamu alaikum to everyone. That is class. Let us start class number 9. Should be a very small class. We need to discuss only one or two topics, and after that, inshallah, we will start our new topic. That is employment income, which is extremely important when it comes to ATX, when it comes to P6. In today's class, we'll be discussing, inshallah, first topic of today's class is NIC, National Insurance Contribution, NIC. NIC also comes in P6 for 2 marks. Even a single marks is important, 2 or more than 1. NIC, National Insurance Contribution. NIC is National Insurance Contribution. Excuse me. Okay, when it comes to NIC, we have NICs for employed person. Employed person. If someone is an employee of the organization, then that employee will have to pay NIC. So for that individual, we have a class 1 employee NIC. Class 1 employee NIC. Class 1 employees NIC. Employees Class 1 NIC is paid on cash benefits. Repeat. So, employees class 1 NIC is paid on cash benefits. Now there are two questions. Number one, what are the cash benefits? Second question is, how do we calculate employee class 1 employee NIC? How do we calculate? So there are two questions. What are the cash benefits, or what do we have in cash benefits? And the second question is, how do we calculate class 1 employee NIC? So let me answer both the questions. First is, what comes in cash benefits? What comes in cash benefits? Number one is salary. Number two is bonus. Number three, if an employee uses his or her own car for employment purposes and his employer reimburses him because he or she is using his or her own car for the employment purposes, then what happens? That employer, what he does, normally employer reimburses that person. So for that we have a rule. What is the rule? If employee is receiving reimbursement from the employer more than 45 pence per mile, more than 45 pence per mile, then only excess than 45 pence is treated as cash benefit for class 1 employee NIC. Let me repeat. What comes in cash benefits? Normally 3 things. One is salary, another is bonus. The third one is very important. That is, when an employee uses his or her own car for employment purposes and employer, let's say, reimburses that person. If the reimbursement amount is more than 45 pence per mile, then only the excess amount comes in cash benefits. For example, Mr. X is an employee of XYZ organization, I'm just assuming, and let's say he has driven his own car for the employment purposes, and how many miles? Let's say he drove 8,000 miles his own car for employment purposes, and his employer, assuming, has reimbursed him, let's say 70 pence per mile. 70 pence per mile. Repeat. Mr. X drove 8,000 miles his own car for employment purposes, and his employer has reimbursed him 70 pence per mile. My question is, what amount will you take due to these miles in cash benefits? As I mentioned over here, any amount which is over and above the 45 pence, only that amount will be taken as cash benefit for class 1 employee NIC. So 70 pence means, let me deduct 45 from this. So excess is 25 pence per mile. It means cash benefit will be, I'll take 8,000 miles into 0.25. So cash benefit is going to be 2,000 pounds. So simply, when an employee uses his or her own car for the employment purposes and employer reimburses that employee and the reimbursement amount is more than 45 pence, then excess amount more than 45 pence, only excess, then 45 pence is considered as cash benefit. Now the next question is, how do we pay class 1 employee NIC? What are the rates? Because the first concept is class 1 employee NIC is paid on cash benefits, and normally in cash benefits we have three things. One is salary, another is bonus, and third one is if that individual is receiving more than 45 pence per mile as reimbursement, only the excess amount is taken in the cash benefits. Now the next question is, what are the rates for class 1 employee NIC? These rates which I'm just writing right now, class 1 employee NIC, these rates will be given in exam as well. So class 1 employee NIC, from £1 till 9,500 the rate is 0, and 9,501 till 50,000 the rate is 12%, and 50,001 plus above the rate is 2%, which means that, for example, let's assume Mr. A is having a salary of 70,000, and I'm just asking you people to calculate class 1 employee NIC. A very simple requirement. I'm just asking class 1 employee NIC. I really want you to pause the video over here and try the question. I need class 1 employee NIC. Very easy to calculate. Till 9,500 the rate is 0%. Obviously, when I multiply 9,500 with 0, obviously I'll get 0. From 50,000, I'm going to deduct 9,500. I'll multiply this with 12%. Let's see what I'm going to get. 50 minus 9,500 into 12%, it gives me 4,860. Now, 70,000 minus 50 actually gives me 2%. So 20,000, then 2%, it is 400. So class 1 employee NIC is 5260. This is class 1 employee NIC. It's very easy to calculate. Okay. Now we have one more NIC. And we have one more NIC, that is called class 1 employer NIC. Class 1 employer NIC. So class 1 employer NIC is also paid on cash benefit. It is also paid on cash benefits. Obviously employer is going to pay this, no doubt about it. But for cash benefits, actually there are going to be two NICs. One is paid by the employee and another is paid by the employer. And cash benefit means normally the three things. One is salary, another is bonus, and the third one is authorized mileage allowance, but only that amount we are going to consider which is more than 45. Only the excess than 45 is taken as cash benefit. Now the next question is, what are the rates for class 1 employer NIC? So class 1 employer NIC. Rates are from £1 till 8788. It is 0%. From 8789 and above, the rate is 13.8%. Repeat. Class 1 employer NIC. From £1 till 8788, the rate is 0%, and from 8789 till and above, the rate is 13.8%. Okay. Let us calculate class 1 employer NIC on this salary, which is 70,000. So how we are going to calculate? Class 1 employer NIC. Class 1 employers NIC. So till 8788 into 0%, it is 0. After that, from 70,000 we are going to deduct 8788, then multiply this with 13.8%. Multiply this with 13.8%. So 70,000 minus 8788 into 13.8% gives us 8,447. So 8,447 is your class 1 employer NIC. Another very important concept is employer. Employer gets employment allowance on class 1 employer NIC. Let me explain what it is. Employment allowance for the employer on class 1 employers NIC is £4,000 per tax year. Actually, this £4,000 per tax year, what it does, it reduces the class 1 employer NIC liability. So let me repeat. But this £4,000 is per tax year. This 4,000 employment allowance is not per employee. Let me repeat. Employment allowance for the employer on class 1 employers NIC is £4,000 per tax year. What it does, what this 4,000 is going to do, actually it is going to reduce class 1 employer NIC liability. And this 4,000 employment allowance is only available on cash benefits. It is only available on class 1 employer NIC, and it is £4,000 per tax year. Okay. So for example, let's say there is an XYZ organization, okay, just assuming, and they are assuming 50 employees are there, and let's say that organization has calculated class 1 employer NIC for the 50 employees because of the 50 employees. So whatever the total comes, from that total we are going to deduct this 4,000. So there is an employment allowance of 4,000 per tax year, which actually reduces class 1 employer NIC liability. But there is one more important point. What is it? The employment allowance is not available to companies where director is the sole employee. This 4,000 employment allowance will not be available to companies where director is the sole employee. If in the entire organization there is only one director and who is the sole employee of that company, then sorry to say 4,000 employment allowance will not be available. Repeat. This 4,000 employment allowance will not be available to a company where the director is the sole employee of that organization. Okay. We have one more employer NIC, that is class 1A employer NIC. Class 1A employer NIC. Class 1A employers NIC is paid on non-cash benefits. Is paid on non-cash benefits. For example, you have given rent-free accommodation to your employee. For example, employer has given a car for the personal use to the employee. For example, employer has given any other asset for the personal use of that particular employee. So class 1 employer NIC is paid on non-cash benefits. How do we calculate class 1 employer NIC? It is very easy. Class 1A employers NIC. The rate is straightforward, 13.8%. So in case of non-cash benefits, whatever is the amount of the non-cash benefit, all you need is just multiply those non-cash benefits amount, non-cash taxable benefit amount with 13.8%. So you will get class 1A employers NIC. And let me repeat, on class 1A employers NIC there is no employment allowance. Employment allowance is only available to the employer only on class 1A NIC. And there is no class 1A NIC for the employee. There is only class 1A employer NIC, which the rate is straightforward 13.8%. So if you know the non-cash benefits, all you need is just multiply those non-cash benefits with 13.8%. Okay. Another thing, class 1 and class 1A employers NIC both are deductible expenses for the employer. So actually whatever employer is paying in class 1 employer NIC, and as he is paying class 1A employer NIC as well, both NIC liability payments are deductible expense for the employer. So employer is actually going to deduct these payments from their trading profit. So let me repeat, class 1 employer and class 1 employer, they are deductible expenses for the employer. Okay. Now let's discuss two more NICs, and these NICs actually belong to self-employed individual. Self-employed. Like we are talking about sole tradership, we are talking about partnership. We have one NIC is class 2 NIC. Another NIC is class 4 NIC. When it comes to self-employed person, there are two NICs. One is class 2 NIC, another is class 4 NIC. Okay. How do we pay basically class 2 and class 4 NICs? Again, very easy. Actually, class 2 NIC is paid 3.05 per week. Repeat. Class 2 NIC is paid 3.05 per week. Okay. But class 2 NIC is only payable where profits is more than 6475. Repeat. Class 2 NIC is only payable where profit is more than 6475. Any business which is having profit less than 6475, that business is not supposed to pay any class 2 NIC. So class 2 NIC is payable on weekly basis, which is 3.05 per week. But there is one additional condition, and additional condition is that profit of that particular business must be more than 6475 after deducting the loss. If there is any loss, you have to deduct the loss. So after deducting the loss, if there is any loss, after deducting the loss, if the profit is more than 6,475, only in that case, class 2 NIC is payable. We have class 4 NIC. So how do we pay class 4 NIC? The rates are very simple. From £1 till 9,500 tax rate or NIC rate is 0. 9501 till 50,000 the rate is 9%. And if you go above 50, obviously there is no limit. Now the rate is 2%. So class 4 NIC from £1 till 9,500 the rate is 0%. From £1 till 9,500 the rate is 0%. And from 9501 till 50,000 the rate is 2%, and 50,001 plus above the rate is 2%. Now the question is, class 2 NIC, these rates are applicable on which amount? On what amount? Okay. Class 4 NIC is applied on trading profit after deducting trading losses, if we have, if any. What do you mean by this? Let me explain. For example, let's say we have a tax year 2021. There's a tax adjusted trading profit of assuming 80,000. But your question says, examiner says there's a brought forward trading loss of, let's say, 20,000 as well. Okay. An examiner is asking, just calculate class 4 NIC. Just calculate class 4 NIC. Now listen, class 4 NIC is payable on trading tax adjusted trading profit, but after deducting trading losses, if we have losses only in that case. Obviously, if there are no losses in the question, then definitely you are going to apply class 4 NIC on the trading profit which is given to you. But if there are trading losses in the question, so what you have to do? First, you have to deduct trading losses from your tax adjusted trading profit, and after that, whatever comes on that amount, you are going to apply class 4 NIC. In this question, I am not going to calculate class 4 NIC on 80,000. Logically, I am going to calculate class 4 NIC on 60,000. So how do we apply class 4 NIC rates? Till 9,500 into 0% is 0. After that, 50,000 minus 9,500 into 9%. Let me check. 50,000 minus 9,500 then into 9% gives us 3645. Then from 60 I'm going to deduct 50,000, then I'll take 2% of this. Then it should be strongly believe 200. So just add this. 3846 is class 4 NIC liability. This is class 4 NIC liability. Okay. Let me tell you one more thing. What is that? When do we pay class 2 NIC? I'm not telling you right now when do we pay class 4 NIC. We'll study that later on, inshallah. Right now I'm just telling you when do we pay class 2 NIC. Only I'm discussing right now class 2 NIC. Class 2 NIC due date is 31st January after the end of the tax year. Repeat. Class 2 NIC's due date is 31st January after the end of the tax year. What do you mean by this? For example, the tax year is 2021. For tax year 2021, class 2 NIC due date is 31st January 2022. Because what I have written, class 2 NIC due date is 31st January after the end of the tax year. So for 2021, class 2 NIC due date is 31st January 2022. For example, if the tax year 21-22, then class 2 NIC due date is going to be 31st January 2023. For the tax year 22-23, class 2 NIC due date will be 2024, 31st January 2024. I strongly believe now you have understood that when do we actually pay class 2 NIC. So class 2 NIC is paid on 31st January after the end of the tax year. So when do we pay class 4 and other NICs? For that you have to wait, please. Right now I've just explained when do we pay class 2 NIC. That was all about NICs. Now let us discuss one more concept which is extremely important. Okay. For NICs, if you want to read anything relating to these NICs, in my book, page 21, you can find all the explanation which you need. In my book, which we have emailed you, and some of you might have got the print as well from your printers. Obviously, I cannot send from Pakistan to you. So, page 21 of my book, you can find all the explanation, tax rates of NICs. Okay. Let me discuss another extremely important topic. The name of the topic is accessing the pension. Accessing the pension. Basically, when does an individual is going to get pension in UK? Okay. In UK, individual can only get pension, income or pensions when that individual reaches at the retirement age. And in UK, the retirement age is 55 years. In UK, the retirement age is 55 years. So as soon as individual reaches 55 years, that individual is actually entitled to get the pension. Okay. So when individual reaches at the retirement age, at that time that individual becomes entitled to get the pension. But there is an exception also. In that exception, individual is going to get the pension before the 55 years. For example, if death of particular individual is proved before the 55 years, then obviously that individual is going to get the pension benefits before the age of 55 years because he is not going to reach 55. Assuming, let's say someone is in UK, is just, let's assume 30 or 29 years old. God forbid, it should not happen to anyone, but just for the sake of explanation. If the doctor tells to that individual that you have XYZ disease and due to that you can live only 3 more years, not more than that. If it is true, then obviously that individual is going to get the pension before the age of 55 years. So if the death proves before 55 years, then that individual gets pension before 55 years. Now the next question is, how do we get pension in UK? How do we extract pension funds in UK? That is very important. When someone reaches pension age, the age is 55, let's say, then how that individual is going to get the pension benefits? Look at this. When an individual reaches pension age, then that individual is going to receive a tax-free lump sum payment lower of 1 and 2. When an individual reaches at retirement age, then that individual receives a tax-free lump sum payment lower of 1 and 2. What is 1? 1 is 25% of funds available. When an individual reaches retirement age, then that individual gets tax-free lump sum payment lower of 1 and 2. 1 is 25% of funds available, and the second is 25% of lifetime allowance. Lifetime allowance. And lifetime allowance in Finance Act 2020, the lifetime allowance is 107,300. So let me repeat. When an individual reaches the retirement age, then that individual gets a tax-free lump sum payment of lower of 1 and 2. 1 is 25% of funds available, second is 25% of lifetime allowance, and the lifetime allowance is 1,073,100 in Finance Act 2020. Now let me give you the two examples of this. Example A. Just let's assume that funds are 800,000. Okay. Example A or scenario A, just assuming that Mr. X has reached the retirement age and he's having funds in the pension 800,000. Number one, he's going to get 25% tax-free lump sum, and that will be 25% of 800,000, which is obviously 200,000. Questions are why you are not comparing with 25% of lifetime allowance. Look guys, what I have written. I have just told you over here, then when someone reaches the retirement age, then that individual receives a tax-free lump sum payment of lower of 1 and 2. 1 is 25% of funds available and second is 25% of lifetime allowance. And lifetime allowance is 1,073,100. Look at this question. Funds available are 800,000. Obviously 800,000 is lower than the lifetime allowance. Then it makes no sense to take 25% of lifetime allowance and take 25% of 800,000 and then compare which one is the lower amount. Obviously 25% of 800,000 is lower than taking 25% of lifetime allowance. So that is why I did not take 25% of the lifetime allowance, because the question is itself very clear. Okay. Number one, this individual is going to get 25% tax-free lump sum amount of the funds available. If we take 25% of 800,000, it comes to 200,000. Now the question is, what about the remaining 75%, which is 600,000? When Mr. X is going to withdraw remaining 75% as and when required basis, then remaining 75% will be taxed as non-saving income, and tax rates would be 20, 40 and 45%. Depends that when individual is taking pension income, at that time is he a basic, higher, or an additional taxpayer? But a very simple concept is what I did. I took 25% of 800,000. I got the answer 200,000. This 200,000. This individual is getting tax-free lump sum. Remaining 75%. This individual, whenever needs, on, for example, as and when on required basis. So slowly and gradually, this individual is going to get the remaining 75%. But whenever he is going to withdraw a little bit, even little bit amount from the remaining 75%, he has to pay tax. It will be treated as non-saving income, and applicable tax rate are either 20, 40 or 45, depends when individual is withdrawing the remaining 75%. When individual is withdrawing any funds from the 75%, at that year individual is a basic, higher, or an additional rate taxpayer. But the concept is remaining 75% is treated as a non-saving income, and whenever individual is going to withdraw the amount from the remaining 75%, so he has to pay tax. Now let us see example 2, scenario 2. This is extremely important. Let's say again Mr. X has reached at the retirement age, but this time at the retirement, funds available are, let's assume 1.3 million. This time available funds are 1.3 million. Obviously 1.3 million is higher than lifetime allowance. Now how to deal with that? Obviously there are two possibilities. Any one of them you are going to face in your exam. One, question is going to have available funds lower than lifetime allowance. Another possibility is available funds at the time of retirement are more than lifetime allowance. Now listen, what to do in scenario B? We'll explain to Mr. X that Mr. X can get tax-free lump sum lower of, this time lower of 1 and 2. So value number 1 is 25% of funds available. This time we have funds 1.3 million. Let me just take 25% of this just to show you. Even though we know that 25% of available fund is going to be higher than 25% of lifetime allowance. It comes to 3,25,000. So let me take second value, which is 25% of lifetime allowance. Lifetime allowance is 1,73,100. Let me take 25% of this. 1,73,100 and 25%. It is 2,68,275. Obviously, the second value is lower than the first value. So this gentleman is entitled to get tax-free lump sum 2,68,275 because the rule says lower of. Okay. Number 1, 268,275, which is 25% of lifetime allowance. This is tax free. Okay. Second, now the question is, what is the rule for the remaining 75%? Now please, what I'm doing, look at this, guys. If I deduct 268,275 from the lifetime allowance, if I subtract 2,68,275 from the lifetime allowance, what will I get? 1,073,100 minus 268,275. I'm getting 804825, which is 75%. Okay. This 75% So remaining 75% will be tax as 20, 40 and 45%. Whenever any funds will be withdrawn from 75%. So individual will have to pay tax, either it's going to be 20, 40 or 45. Let me repeat. How did I get 8,04,825? I deducted this 25% from the lifetime allowance, so I got this amount. So remaining 75%, when this individual is going to withdraw, so he has to pay either 20, 40 or 45% tax. And it is not going to be like this. He's not going to take the remaining 75% at once. So whenever on as and when required basis, he's going to take his slowly and gradually amount from the remaining 75%. So this individual will have to pay tax. Okay. Now the question is, sir, you have shown us all the working on lifetime allowance, but this individual at the time of retirement did not have the funds lower than the lifetime allowance. This individual actually had funds. This individual actually is having funds more than the lifetime allowance. So what is the rule for the excess amount? Because the lifetime allowance limit in this question is lower than the funds available. This individual is actually going to get 1.3 million. So question is, sir, you have explained each and everything relating to the lifetime allowance. You did not tell us anything about this excess amount. So let me first show you the excess amount. Excess, then lifetime allowance. Let us see how much we have excess as compared to lifetime allowance. From 1.3 million, which is the available funds, I'll deduct lifetime allowance. So here comes the excess amount. The excess amount is 2,26,900. The excess amount is 2,26,900. Now the question is, what is the rule for the excess amount? Because so far, whatever you have explained, that your explanation is around this lifetime allowance limit. So what about this excess amount? Now listen and listen carefully, that what are the rules for excess amount. For this excess amount, if individual gets this excess amount in the form of a larger annuity, then tax rate is 25%. Let me repeat. What is the rule for this excess amount? When this individual is going to get this excess amount in the form of larger annuity. Larger annuity means a fixed stream of cash flows. For example, this individual is going to get, let's say, 40,000 every year, maybe 50,000 every year, depends. But when this individual is going to get excess amount in the form of larger annuity, then he has to pay 25% tax. But if this individual says, no, I need the excess amount lump sum. If this individual wants excess amount lump sum, this individual says, I don't want to wait. I need the excess amount lump sum. To be very honest, when this individual is going to ask the excess amount lump sum, HMRC is going to be very honest, give him the advice. They will obviously going to request him, don't take the lump sum amount. Don't take entire excess amount as lump sum. But for example, this individual says, I need excess, then lifetime allowance, whatever the amount is, which is in my example 2,26,900. If this individual says, I need this amount lump sum, then there is a gift for this individual. the gift given to this individual by HMRC is the tax rate for the lump sum excess amount will be 55%. Look at this. Here comes the gift. You were the one who wanted lump sum excess amount. And HMRC people were telling you not to take lump sum. But you said, no, I need lump sum. So the question is, so why they have put such a high rate, 55%? Just to discourage the people. Then don't take such a big amount lump sum. So even you are at the retirement age, HMRC wants you to spend money wisely. Don't spend money unwisely. Okay? It does not mean that someone is reaching at their retirement age and someone is getting old, that person starts spending money unwisely. So why do they have 55% rate? I believe there's only one concept. So HMRC wants everyone in the UK to spend the money wisely. So leave this part, but we just need to remember two things. The excess amount when individual is getting in the form of larger annuity, then the tax rate is going to be 25%. But when individual gets this excess amount lump sum, then tax rate is going to be 55%. So let me just sum up all the rules. So before summing up all the rules, if you want to read what I have discussed right now, in my book you can find all this stuff at page 26. In my book you can find all this stuff at page 26. Now just let me give you a quick overview what I have just discussed relating to accessing the pension funds. In UK, when individual reaches at the age of retirement, which is 55 years, then this individual or that individual becomes entitled for the pension. Okay, but God forbids if death proves before 55, so this individual is going to get the pension benefits before 55 years. Okay, let's talk about the normal scenario. Someone reaches at the age of 55, then at the time of retirement he can get 25% lump sum tax free lower of, number one is 25% of funds available and the second is 25% of lifetime allowance. If funds available are more than the lifetime allowance, then for excess we have the rule, if excess amount then lifetime allowance, if any amount which is more than the lifetime allowance, for that excess amount we have two rules. One is if excess amount then lifetime limit individual takes in the form of larger annuity, then that individual will have to pay 25% tax. But if that individual says, no, I need the entire excess amount lump sum, if this individual needs the entire excess amount lump sum, then this individual will have to pay tax 55%. So that was all about accessing the pension. You can go and have a really good look on page 26 of the book. So thank you very much for watching this video.